Okay, dear traders, hello and welcome back to our second stream. By the way, my name is Nick. Don't forget to subscribe to our channel so you won't miss anything. Don't forget to ring the notification bell, my friends, and also I'd like to remind you that right now we have a Telegram channel.
Okay, hello Nick. My name is Shehbaz. Hello everybody. What's up, Nick?
Well, thank you very much, my friend. Everything is fine. So guess what's the topic for today's stream is?
Okay, so for today's topic, I already know it's non-farm payroll this Friday. So why it is important? What do you think?
Non-farm payrolls, my friends, and the unemployment rates. These two things are extremely important because they reflect the situation in the strongest economy in the world, in the US economy. So if the unemployment rate is falling, well, it means that people have jobs, so they start consume more, and so, well, everything is good. Yes, well, nothing to worry about. So let's say so.
Cool. The unemployment rate in US is at historical low. So, right?
Yeah, well, I'd rather say that it's on historical lows since 2019. So, well, in 2019, my friends, so it was around like 3.5, 3.6%, the same as right now. Yeah, so we might say that we have like 4 years of the full US employment right now. Yes.
So how this unemployment rate is connected with the interest rate in the United States?
That's a really good question, Shehbaz. Well, my friends, I'm going to explain it to you. So definitely we have this connection, we have this link. So look, if the unemployment rate is rising, it does not leave any room for the central bank to increase the interest rate. Well, if the unemployment rate is rising, it means that the economy is in recession. And in this case, of course, it's not good to tighten the monetary policy, yes, to increase their rate. But if unemployment rate is falling, if everything is fine with the labor market, then definitely Fed will, the probability that Fed will increase the rates is quite high. And of course, the US dollar will strengthen.
Okay, as far as I understand, a strong dollar is not helping the US economy. The indices are falling, the inflation is rising.
Yes, unfortunately, that's how it is right now, my friends, for the US economy. Yes, so well, as we can see right now, even with the strong dollar, yeah, so still the economy is in recession. Why? Because as we have already discussed, the reason is not the reason of the inflation. Yeah, so just is not in the consumer prices. It's in energy prices mostly. Yeah, so high energy prices provoke high inflation. So that's why.
Okay, unfortunately, that is the global situation right now. But what about the usual Olymp traders? How to trade non-farm payrolls to gain profit?
Oh, well, that's really simple, my friends, as usual. So if we have, if the facts of the unemployment rates, for example, is lower than the forecasts, then we have to trade for the US dollar. Where we need to sell Euro USD. Yes, well, I mean to trade down on Euro USD, for example. If vice versa, for example, the unemployment rate is higher than expected, then of course we have to open trades up in Euro USD. But well, anyway, my friends, Angie will tell us more about like different Olymp trading modes, and she will speak more about that.
Awesome. So economists expect the unemployment rate to be less than 3.5%. What's your opinion on this?
Well, the fact actually, so the expectation is 3.5%, while the previous fact was 3.6%. In my humble opinion, my friends, well, right now the situation is quite controversial. So we might say that there are some factors which are quite good, and there are some factors which are quite bad. So let's say so, yeah. So for example, if we speak about job cuts, yes, for April we have like a tremendous level of job cuts. Also, the latest data from JOLTS was published, and it remained the same as the forecast. So actually we see that JOLTS are decreasing. On the other hand, yes, we have initial jobless claims, so the numbers which have been published, well, each Thursday, And right now we see that the average number of jobless claims is rising while the continuing jobless claims are falling. So the situation is quite controversial. Well, in my humble opinion, my friends, the unemployment rates will remain the same, so it will be like 3.6%. Unfortunately, right now we don't see ADP non-farm payroll, so it is released tomorrow, so not today. Today is Wednesday, but anyway. And right now, my friends, let's speak more about India, maybe, Shahbaz. So could you tell us a little bit more about the labor market in India? But before we go to Shahbaz, my friends, again, so don't forget to subscribe, don't forget about our Telegram channel, and don't forget about social networks. Please, Shahbaz, tell us more.
So, guys, labor market in India refers to the employment in India. In 2019, 42% of total employment was generated by agriculture, and rest half was evenly divided between the service sector and the industrial sector. In 2020, the agriculture employment was around 41%, and service sector employment was 32%, while industry sector was around 26%. Over 94% of employment in India is under unorganized sector, which also refers to a sector where people don't pay GST because it does not comes into the GST bracket.
Okay, got it.
Because the income is less than the tax slabs of the payable income. So, in this sector, it comes people who owns general stores, maybe workers, laborers, maybe farmers, and the self-employed people, etc. And there is another sector, that is organized sector, which refers to people who are officially employed in a publicly traded company, maybe corporations, factories, etc. And coming to the unemployment rate in India, it's around 7.83%, and in the April, the latest data, and for the previous month, in the March, it was around 7.6%.
So it's rising as far as I understand, yeah?
Yeah, it's rising a little bit, but it's not exponentially to be concerned of.
What do you think about the level of the unemployment rates? Well, 7.8% is quite high. What do you think?
I think countries like India, it's quite normal to have a unemployment rate between 7 to 8%.
Well, because so for developed economies, my friends, usually the normal level is around 5%, well, 7% maximum.
Okay. And recently, Indian government also has reduced the excise duty on petrol and diesel, as we discussed in the previous video as well. So, because of that, there will be employment opportunity in the industrial sector because the production will rise, because the supply side inflation will be lower, and factories will have more money to do the capital expenditure, maybe in the form of employment. And talking about the sectors which may gain, which may have employment opportunities in the futures in India are semiconductors industry as well as defense sector. Talking about semiconductor industry, Indian government has recently done a deal with TSMC, which is the largest chip manufacturer in the world. And so this $10 billion deal will help TSMC to manufacture the chips in India, and which will create the employment opportunities in semiconductor industry in India. Also, Israel-based chip manufacturing companies are investing in India to manufacture chips in India. So this is a very good opportunity in the electronics department, electronics engineers. And talking about defense, there has been a few good deals in recent past year. There is an initiative by Indian government, that is Make in India. So in that, India is working with Russia to make hypersonic missile, that is BrahMos 2 in India. Also, Hindustan Aeronautical Limited, which is manufacturing Tejas fighter aircraft completely built in India. So In these companies, there will be high demand of engineers in the defense sector. Also, India is working with Israel and US to manufacture guns and other military hardwares in India. So that will also create employment opportunities in defense sector in India.
Well, I guess that defense sectors will be really interesting all around the world right now. Yeah, so the situation is quite unstable, my friends, and so that's why just pay attention to the stocks of the defense sector companies. Well, I guess, yeah. So, for example, speaking about the United States, like Lockheed Martin, yes, and so on. And right now, my friends, well, I guess that it's time to go to like Angie part, yes, and Angie is a really good expert, and she will tell us more about different Olymp trade modes and different trading opportunities which you may use during the non-farm payrolls release this Friday, my friends. But before we go to Angie again, so don't forget to subscribe to the channel. So Angie, please pick it up and tell us more about Olymp trade opportunities. Thank you.
Hello, dear traders. This is Angie here. So now that Nick and Shabazz gave us an explanation on non-farm payrolls, let's take a look at the price chart and check out a few different ways that you can trade the release. I want to once again remind you that we have a Telegram channel. The link to the Telegram channel is pinned in chat. All you have to do is follow the link, choose your local language, and you can enjoy valuable information on the financial markets from Olymp Trade. First, let's just very briefly look at the economic calendar. I do want to just explain the numbers to you. So this was last month. This was Friday, May the 6th. As we can see here, the previous number was 428,000. The forecast was lower than the previous fact at 391, and the release came same as the previous number, but it was above the forecast. Now, the numbers were kind of contradicting. I just want to remind you that if the release is better than expected on some economic calendars like investing.com, you're going to see a green number. And if the release is worse than expected, the number is going to be red. As you can see, the unemployment rate for last month was expected to be at 3.5%, but it was released at the same number as the previous fact at 3.6%. So the numbers were kind of contradicting, and of course I'm going to show you how the price reacted on the price chart. But as you can see here, so I do see a question from Salim in chat. When is the next non-farm payroll release? It is going to be this Friday, June the 3rd, and it's going to be at 12:30 p.m., which is GMT. So currently the forecast for the non-farm payrolls for May, so for the previous month, is that 325 jobs were created, and once again the unemployment rate is supposed to drop to 3.5%. Now let me go ahead and go back to the price chart. Here I have one pair open for the euro US dollar. I'm looking at the 5-minute time frame. This is FTT mode, and on the bottom here I have USD JPY in the forex mode, also on the 5-minute time frame. Also, just remember that you can use this split screen on the bottom left of the platform. You'll see like a split screen basically, so you can also watch two different assets at the same time during the release. So right now I have Euro US dollar and USD JPY, but just so that you understand, you can use any USD currency pairs like Australian dollar US dollar, USD CHF, GBP USD, NZD USD, and USD CAD. Likewise, if you would like, I'm not sure if it's going to give you a really big, I'm not sure if it's going to show you very strong volatility, but you can also check out gold, because when the price of the US dollar rises, the price of gold drops, and vice versa. So now let's talk a little bit about what are the different ways that you can trade the release. So this was 5 minutes before the release, these blue lines, and this was the actual release at 12:30 GMT or 15:30 at GMT plus 3. So initially the price of the US dollar rose, and then it dropped. Okay, as you can see here, so first the US dollar, vice versa. First the US dollar dropped, and then it rose, because once again, as if we go back to the economic calendar, the release was kind of contradicting, but the market decided that this release, because it was a lot higher than the forecast, was more important for the U.S. dollar. So this is why we saw the U.S. dollar strengthening. So on FTT mode, when you are trading the actual release, you can trade like the minute that it comes out. And this works great when there is a big difference between the forecast and the released, at least 20%. And also what you want to pay attention to is that you'll see a big movement in one direction if both indicators are in line. So this means that both the unemployment rate and the NFP release are both better than expected or worse than expected, which I just explained on the economic calendar. So if the release is better than expected, then trade the US dollar up. If it is worse than expected, trade the US dollar down. Now, another way that you can trade is to wait for a short period of time and look for a strong movement to one side. Like I just mentioned, so initially the US dollar dropped. That's why the US dollar currency pair rose. And then we have 4 consecutive candles. So this is 5 minutes. So this is a 25-minute movement all the way down. And we see a similar situation on US dollar JPY. So first the US dollar dropped, and then we saw 4 consecutive pretty big candles to the upside. So sometimes some traders may watch the chart for like 10 to 15 minutes before entering a trade, and some may even prefer to wait for about 30 minutes and trade the correction or pullback. What do I mean? I mean that after we have a strong movement to one side, like we have here or like we have here, you can wait. So this was about 20 or 25 minutes, and then wait for a pullback and trade in the opposite direction. So when the price is returning after an initial move. One thing that I want to mention here, after you see a splash of volatility, you can kind of identify, not always, but sometimes you can identify the where the reversal is coming when you see small bodied candles or dojis. Okay, so this is like a doji. So you can anticipate a reversal at these points. So you can, so another way that you can trade is that you can wait for a short period of time before you enter a trade. Now, unfortunately, it's hard to pinpoint these reversals, especially since we're looking at lower time frames and volatile news releases. Trading on news is considered to be more of a risky strategy, so never forget about money management. And my suggestion is don't enter trades with very large amounts. Now, as far as the trade duration when we're trading on FTT, then it's always recommended to stick to ×2 or ×3 the working time frame. In some cases, like if you anticipate like a strong movement in one direction, you can even choose the trade duration that equals to the time frame that you are looking at. So for example, right here I'm looking at the 5-minute time frame. So my trade duration should be 5 minutes, 10 minutes, or 15 minutes. I personally usually stick to ×2, so my trade duration would be about 10 minutes. By the way, you also want to pay attention to the rate of return. This is this percentage right here that you can see next to each asset. Sometimes it may drop to something for example, like 30%. Now, this may not be a profitable venture, especially considering the risk of volatility. So you want to stick to profitability of about 80% or higher. Here I also want to mention that there is a feature of setting up an order for the trade to open at a specific time. And this can actually be very useful if you are not going to be at the computer for whatever reason and you really want to trade the NFP release. You can just click on the clock and you can select the time at which you want the trade to open, for example 12:30 p.m. GMT. Of course, don't forget to check the release in your local time, or just don't forget that you can also choose a quote at which the price the trade will open. And on FTT mode, because I just mentioned the rate of return, you can there's also a little slide bar on the bottom. So you can set it to about 79%, so that if the rate of return is lower at the time of the release, the trade will not open. Let's see here. You can also you can set up a pending order on the FTT trading mode and also on Forex. Let's see here. Now, speaking about Forex, you can trade the release in the Forex mode as well. Here you want to remember to select the multiplier correctly. The higher the multiplier, for example, times 500, the higher the potential profit that you will make. But don't forget that the higher the multiplier, the closer is going to be the stop out level. So during wild and unexpected volatility, you may want to choose a lower multiplier such as times 200 or even times 100. And you also want to set a stop loss and take profit. You can automatically set them up in this window right here. And usually the normally recommended stop loss is minus 50% and the take profit at plus 150%. This is what we call a 1-to-3 risk to reward ratio. My friends, I hope that this information will be useful to you and that you will make a profit this month, this Friday. Don't forget that you can test these features and practice trading on the demo account. That's all I have for today from my side. Nick Shabazz, back to you.
So Angie, thank you very much for your opinion, and thank you very much for the information, which will be really useful, guys, for you, I guess. And it's time to say goodbye right now.
So guys, please like, share, subscribe to our channel, and definitely see you in the next stream.
See you next time, my friends. Bye-bye.